Hi, this is Kirk with Forex Strategy Secrets, and so what we're going to be talking about today is the foundation for successful trading strategies. Now, everything that we're going to show you today can be learned quickly in less time than you thought that you could learn the material. And it's because we're showing you some strategies you can kind of copy, imitate, learn how to do something similar to what these strategies are doing, and that'll accelerate your learning curve. What do you need to be successful in the Forex market? Of course, you need some knowledge of a strategy, a system, and you need some tools, some indicators, and some alerts and signals, and you need some experience. Now, the experience is the thing that takes the longest to get, but that's what we're going to show you how to cut that time way down. And one of those ways would be to imitate what someone else is doing that's already successful for them. And we have 4 different strategies that we're going to be sharing with you, and you can see if one of them feels comfortable to you that you might want to follow along with. The 3 pillars of success in trading would be, if you can make pips on a regular basis, keep those pips, and repeat the process. We have many students that once they reach the point where they know they can make pips daily, they actually take some money out of their account, use it for some needs that they might have, or just to provide themselves a treat for having been successful, because they know that within the next day or two they can make those pips back, and they can do that day after day. And so we're going to share with you a trading system that will work for many different trading strategies and styles. You will see examples of 4 different trading strategies that all have their foundation in one trading system. And here are a few of the trading styles that people like to use. They'll trade the trends. Now, there are many more than this, but here are just a few that I've listed. And they trade breakouts when the market's they anticipate when the market's going to break out. They trade the momentum of the market once it gets rolling in a direction. They trade that way. They trade based on patterns, setups that they see. Long-term trading using larger time frames, or short-term trading. Now, so it's one or more of these trading styles feel good to you. Just think about it and say, well, I kind of like this one. So then as we go through these trading strategies, you'll see if one of these would work in your behalf. Our first strategy is one that Clark's used. We're using Clark's style with this strategy, and it mainly revolves around short term. So the consistent trading is one of the highlights of Clark's approach to trading. He's very consistent. Does 90% win-loss ratio get your attention? Well, it's his consistency that allows him to get that 90%. Amazing thing about the way Clark trades is, at first glance you might think that he's trading those smaller time frames. Once you see what he's doing, you'll find out that he's trading the direction of the trend, the direction on those larger time frames. But he's timing his entries on the smaller time frames. Clark's greatest strengths are he follows a trading plan. He knows exactly what to look for in the smaller time frames, confirm it on the larger time frames, and he does that over and over again. So he follows that plan. He does the same thing on every trade. He's consistent, and he exercises patience, discipline, and he focuses on what he's trying to accomplish. He doesn't let other people's opinions or suggestions sway him in the way he trades. So that's why he has a 90% win-loss ratio. Here's how his strategy works. On the right-hand side, you see this 15-minute chart, and I've marked a place where Clark might enter on a trade. That would be the place he would enter if he were seeing this particular trade. And there were some better places to enter over here. He may or may not have entered over here on this side, but for sure he would have entered on this one. What was he looking for? First of all, on this vertical white line on the 1-hour chart, he's using the 1 hour and the 15-minute. Here it said, yes, trade in the long direction. This confirmed that long direction on the 15-minute chart, and it was really strong on the next move on this 15-minute chart. So once he sees that set up, then he goes to the larger time frame and he says, well, that 4-hour chart is saying the same thing. It's saying probably ought to be taking a long trade there. And so he uses what we call a bottom up. He finds the signals on the lower time frames, and then he moves up to the larger time frames to confirm, to see if that is the best move, the move that's taking place. And he just does that over and over again, and that's where he makes his consistent pips all the time. He averages between 50 and above, 50 to 70 pips a day, and sometimes he even gets many more than that. One day last week, he had over 800 pips in one day. Of course, the market was moving, and he was all set up to take advantage of that. What does he do the next day? He looks for 50 to 70 pips. He doesn't worry about trying to make 800 pips a day. Those will come. He's looking for the consistent 50 to 70 pips a day. So Natalie's strategy, this is the second one we're going to be looking at. She uses more of a long-term approach to the market. Now, have you ever wondered how to make between 500 and 1,000 pips a week on a regular basis? We're going to share with you what Natalie looks for, what she sees, and show you how to do the same thing that she does to make many more pips in a week than most professional traders make in a month. So Natalie has spent hundreds of hours doing simulated trading. This is how she became good at what she does, and Clark did as well. She asked for help many times. When she needed help, she would ask for it. Then we have places in our system where you can ask for help. You attend the trading rooms. That's one of the places you can ask for help. She collaborated with other inner circle members. Now, that's an area that you can find out about where they're successful traders and they're talking to each other about which trades they're looking for, they're setting up for, they're in, when they're anticipating getting out, and they talk back and forth, and so it helps them to find trades that otherwise they may not have seen, and so they all help each other. And why did she choose Forex Strategy Secrets? Well, she had bounced around with a number of different trading styles, and she found that ours was simple. She liked it because it was right straightforward, and she had a good support team. She could ask questions. She could get her questions answered so she could progress without having to be frustrated and reach a dead end because the material didn't answer the question that she had at that time. Here's how it works. As you see this vertical line, she's looking for CDC. That's convergence, divergence, or congruence. One of those three things she's looking for. Many times looking for convergence or divergence. In this case, this sign right here said this was going to be divergent, meaning that the market had a high probability of changing directions, or at least resting from the direction you see that it was going at that point in time. So when she sees that set up, then she waits until she puts an alert here at this fractal, this swing low, and says, okay, when it reaches that point, I want to have heads up because that's the point that I want to be entering the trade. Now, as soon as she enters the trade, she knows exactly where she's putting her stop. She goes back to another fractal and puts her stop there, and she knows right where she's going to set her take profit. Now, there are some other methods that she's using now that even will double the amount of profit that she would make on these trades. And so that's how she sets it up. This is about a 60 to 80 pip trade on this one where she got in and it took her out after a few time frames. This is a 4-hour chart. She trades the week, the day, and the 4-hour charts. She enters on the 4-hour. Occasionally I've seen her enter on a 1 hour, but most of the time it's the larger time frames that she's looking to trade. Pretty straightforward, and that's easy to grasp, and you can learn how to do that without a lot of effort. Now, the strategy number 3 that we're going to be talking about, this is what Mitch's style, how he looks at patterns. And once you learn how to recognize patterns, no matter what system you're using, your trading will be enhanced by learning how to recognize patterns. Chart patterns can give you a point of reference that targets your entries and your exits. And there you can use different time frames and different support and resistance levels. So you want to go along with what the market's momentum is sharing with you, the momentum indicators. Once you get these targets, you can time your entry based on the momentum of the indicators. And when you start recognizing patterns, you'll start to feel like you're in tune with the market. You're going in flow with the market. You're not fighting against it. It's just, oh, the market's going to go up, oh, it's going to go down, and you're just trading along with whichever way it's going at the time. And your current style of trading will be enhanced. We've had many people say that once they learned to recognize a few patterns, then their trading became better, more efficient, and they became better at what they were doing. The corrective pattern, called the ABC, is one of the least risky patterns to trade. This is one that Mitch trades a lot. He has many patterns he uses, but this is one that he points out many times to everyone else. You'll find there is a reliable profit target, and it can be managed very easily once you know how to set it up. And he's developed this unique ability to recognize these chart patterns, and he can teach them to others. And this is one thing that he's done for many people, and he will do for you as well. Just have to get in touch with us, and we can show you how he can share with you how he does it in more detail, because there's a lot of patterns to be able to recognize. Once a chart pattern is recognized, you have your entry points, and you can use these and find them by using the momentum indicators and the support and resistance levels. Then a profit target can easily be set, letting the market tell you what it's going to do. And then you can just go along and say, oh, the market says it's time to get out, or the market says stay in. It's going to move a little further in that direction. The same chart pattern can be found on small as well as large time frames. Once you learn to recognize what's going to be the difference between large and small. Well, basically it's the number of pips. Smaller time frames, you're going to make fewer pips. Larger time frames, make larger number of pips. Same effort, but it might depend on your trading style and your personality and your time frame. Here's a couple of patterns that Mitch uses on a regular basis. Here's the ABC correction pattern. There's A, B, C. He many times trades the C. That's a safe trade because the pattern's already given you the direction that it wants to go. The momentum indicators are saying, yes, we're being strong going in that direction. And so that's a pattern you'll see many, many times. If you, before it was ever pointed out to me, I kept on seeing this thing. I just didn't ever know how to trade it. And once you see and explain how to trade that, it's just like, wow, that's fantastic. Here's another pattern. You've all seen this in a impulsive move, in a corrective move, an impulsive move, and a corrective move, another impulsive move, and a corrective move, and then you've seen the market go sideways for a while and possibly change directions, or it rested and then took off again. The main thing is, no matter which time frame you're trading, if you're trading these impulsive moves in the market, you have a high probability of having a good trade. If you're trying to trade the corrective moves, not so much. You're going to have a hard time. Yeah, you can make a few pips, but many times you will find yourself losing pips because the market's going as a correction. It's not going in a direction. It's taking a breath of air right here. You want to trade that as it's coming out, and it's rested and it's really ready to move again. So those are a couple of patterns. There are many, many more patterns, but those are a couple that Mitch uses to trade all the time. So once you see this set up, what if you missed this first one? Well, the second one would be just fantastic because it moved even further. And that's one thing you'll learn, that not always the first one is the biggest. The next impulsive move is big, and the third or the fourth are going to be not quite as large most of the time, but the third one can be pretty big also in these this type of a pattern. Now we're going to look at the fourth strategy, and this is Ignacio. This is a style he uses. He uses a short-term method also. Mitch uses a mid-range method, I should say, and he'll trade a lot of times on the 4, the 1, the 30, and the 15 is where he spends most of his time looking for chart patterns. So Ignacio, have you ever wanted to look for over the shoulder of a trader who is making between $15,000 and $20,000 a month part-time? Would you want to know what they're doing, what they've done, how did they get there? Well, this is your chance. You can watch Ignacio trade multiple standard lots on each trade. That's 10 standard lots on each trade. So every time the market moves a pip, it's either going in his favor, roughly $100, or against him $100. And so you have to build up to that point, both financially in your account and emotionally in your skill level, to be able to trade that. And that's what he's done, and he can share with you how to do that. Is you can get there more quickly than you thought once you see how someone else is doing it. He's consistent in what he does and what he sees when he takes trades. So does $15,000 to $20,000 a month sound like a good income to you, like even on a full-time basis? Well, that is a fantastic amount of money to be able to come in on a regular basis. Does Ignacio ever lose a trade? Well, of course he does. Does that bother him? No. He knows that he's going to be able to make that back because, as we talked about earlier, he knows how to make pips, he knows how to keep them, and he knows how to do it again. He says, I do not have losses, I have costs. That simple change in the use of your language puts what most people call losses into perspective. Now, you're in a business. Trading is a business, and it's a cost of doing business. If you have rent you have to pay in your business, or you have utilities you have to pay, there are costs of buying materials to resell. Those are costs of doing business. And not every 100% of that $100 sale you made is profit. Only a portion of that is profit. And so you've calculated though that some of that's losses, and then you have a net profit or a net amount of money you're making each month. And so if you look at it that way, then it's just like running a business. And he always uses a stop loss, and that keeps him from having the market take off and run against him and he loses. Can you imagine having something go 100 pips against you at $100 a pip? Well, that's a lot of money. Do the math. He uses stop losses so that he has losses, but they're minor, they're small. And so he's willing to take what the market is offering, and he doesn't expect to get what he wants. So be in tune with the market. Find where the flow of the market is, and then you'll feel comfortable once you realize how to do that. So here's an example of how Ignacio's style works. See these vertical lines right here on this 1 hour chart? There's a specific setup he's looking for. You can see there's a little bit different, but he can take either one of them or both of them on this 1 hour chart. That's it. He uses the 1 hour, the 15, and then sometimes he goes to the 5 minute to manage it. So he's really kind of trading the direction of what this 1 hour time frame. From this vertical line, this is the area that would have been traded on the 15 minute. It came a little bit before this point right here. It came back over in here is where he would be trading to make his pips. Then again, this is a bigger move going down. This is the area that he would be trading and taking out his pips. This is about 20 pips up here, and this is 35 to 40 pips down here over 2 different days. But he's trading more than one currency pair, because once one currency pair moves, he knows that there are several others that have a high probability of moving also. And so that's how he can find more trades. And he doesn't trade 24 hours a day. He has a set time that he trades that he knows the market moves well for him. And so that's how he's able to make these large amounts of money. Do you see anything in common between these 4 traders? Was there something that you noticed? Well, they all use the same trading system, and it's called nth degree. You saw the same indicators. They just use different time frames, a different way of approaching it, but they're all using the same indicator. So when they talk to one another, even though they might have a different strategy than each other, they know exactly what they're talking about when one says, this is something that's happening, this is what's happening. They know how to relate that to their styles, and so they can collaborate with one another even though they're totally different strategies. Now let's review what we've learned so far. And we call them secrets, but they're really the only reason they're secrets is because they're right out in the open, and most people just trip over them and don't even see them. They might not even trip over him. They just run across them and say, well, I didn't see anything there that was helpful. But let's go through them. Learn how to recognize a trend. Many people don't know how to recognize trends. All of these traders could see the trend. They could recognize when the trend was changing, when it was ending. They learned how to identify high probability trades. They learned how and when to exit their trades. They learned which time frames to trade for them and what time of day was best to trade it for their situation. They learned how to trade more than one or two currency pairs. They're trading several currency pairs. So if one's moving, then they know that they can get a lot of moves. If the yen pairs are moving, that's what they're trading. If the pound pairs are moving, that's what they're trading. Now, they learned when the market has the highest probability of a good move. They learned how to trade while working a full-time job. Now, Ignacio is working his full-time job still, and he's $15,000 to $20,000 a month trading. He works for a bank, and he's got an arrangement with the bank that he's able to trade while he's working and still do his job. So I don't know how he worked into that, but that's great to be able to do that. They learned how to recognize chart patterns. They're all using chart patterns before they ever talked to Mitch. They had a pattern that they were looking for. But by talking to Mitch and Mitch talking to them, they all have become better traders by collaborating with one another. And you can talk to all of them as well. And they learned how to control their emotions. They learned how to be focused and to be consistent. They learned how to stop their losing trades from running too far. And they learned how to have their winning trades and let them go as far as the market would allow them to go. They learn how to keep a proper journals and records. Now that's one thing that a lot of traders don't do. They just go through and trade and say, oh, I got this much money I made and I lost. But if you don't keep track as to why you won, why you lost, where you're going, where you've been, then you're not going to be effective. And then all these traders used a record-keeping system. Elaborate or simple, it was still a record-keeping system. We can share with you how to do elaborate record-keeping systems and simple record-keeping systems. Depends on your personality. And they practiced simulated trading. That's picking a strategy and doing it in a simulated mode over and over again in a short period of time. If you're trading an hour time frame or a day time frame, it takes a long time if you're just waiting day after day. But if you can do a lot of trades in a matter of 15 minutes, then that gets you up to speed quickly. So between simulated trading and watching someone else trade that knows how to do it, that can cut your learning curve down considerably. The nth degree trading system contains all of the above secrets if you apply them. They're there. You just have to use them and discipline yourself to use them. It has all of the tools you'll need, all of the indicators, all the support, ongoing instruction is all there within the nth degree trading system. Has everything you'll need to be a full-time successful trader. And we have all of that for only $497. If you purchase this link within the next 24 hours, you'll have lifetime access to these Trader Success Summit strategies. These are recordings of them talking about what it took to get to where they're at and then sharing with you their strategy, not me just reviewing it. You can actually hear them talk about it. That if you do an order quickly, then that will let you have access to that on a permanent basis. The Success Summit includes all 4 of these successful trader strategies and 4 bonus presentations, which by itself has a value of $497. The summit contains over 8 hours of applied instruction showing you how to shorten your learning curve to become a successful, consistent trader. Now each panelist will provide valuable insight on how you can get to where they are and in less time than it took them. So the $497 package includes the nth degree trading system, lifetime access to 2 different trading rooms, our European trading room and our U.S. trading room. European trading room runs 5 days a week, and you have to have the course to be able to attend that. The U.S. trading room runs 3 days a week, and everyone can have access to trade that. So if you want to attend that and don't have our course, let us know and we can let you in on that one so you can actually see the course in action. You can actually talk to some of these people because they attend the trading rooms now. And Clark says, why do I attend these trading rooms after all these years? Just because I continue to learn. Someone shares something, some new insight, and I'm becoming a better trader by associating with other good traders. And you get a 60-day trial of our alerts package. And we didn't talk about that, but a lot of these traders are looking for those alerts, to signals to tell them, hey, this is the setup that I was looking for. And there's a lot more in the package. The link for this is right here below. So you just type this link into a browser, http://linktrack.info/497. Now, if you type that in, then it'll take you to a thing and you can order and get started right away. And if you have additional questions that you want to find out before you get involved, how to attend the trading rooms, how to do some other things that we have available, check with Michael at forexstrategysecrets.com. Or you can call him on his direct line, 801-805-0159. That's his direct line. You don't have to dial an extension on that one.